Good morning, everyone. This is Rose. It's Friday, May 31st, end of the month, end of the week. We might get some volatility. Let's see, it's 8 minutes after 9 a.m. We had the personal income and outlays news just came out, which is an important news, and it was in around 8:30. So we have another one, 9:45 a.m. Eastern Time coming up. And nothing much happening in the afternoon. So we're going to have to pay attention to the 9:45 a.m. news as well. So I need to adjust because the Globex session pre-market range now extended. We came very close to the 2R of the Asia range, but we did not tag it, but it could, it's just looking for a new buyers with the pullback here. Probably buyers are trailing their buy stops above the pullback bars to get in. Market can continue to go higher, but we hit a tight trading range on the Globex session and it's from yesterday's session. So even if we come down, we're going to retest. And if the second test actually breaks it, this is where I want to sell. This is where I like to see this market get a reversal. But if we continue to go and have a buy to close or bullish trend from open at the U.S. session, then I'm going to look for this area to be tested. So 5,300 is the run number is still magnet for us. The market has been going there for some time. That means that we have some kind of a trading range there, and we're just oscillating around that trading range up and down. Let's see, that's 5,300. I don't have much data. So we were there, we had a breakout, and then came back and retested at and below, and then went back up again. So this area is very much resistance. The market could test either this red zone or the trading range above. Yeah, this is an important area as well, but I'm just thinking it's possibly right here, which I marked already. That's why we're getting a rejection, but let's just measure. Just want to see where the buyers are. Okay, so I think I just got the wrong, sorry. Should be ATR. All right. So market is the shallow pullback I like to see bears actually at least come down to this right here, and then look for a bounce. So I'm not really I'm not keen on buying right now right here unless they close a bull bar. That's a whole different story, but it's probably wants to come down here, if not here. So somewhere between the 66% and 50%, we could pull back. If market wants to reject this imbalance bar and news bar, it could come all the way down 66% pullback into this area. But I'm more interested in a shallow pullback and see if there are any buyers here. I like to see either we come here and continue to go back up, and this is where I'm going to find sellers or probably look for sellers. But since this is news, market could also come down here, and then we could look to go up, and we'll see. So I'm not ready to buy this. But if you are long, I think the market is going to want to go up a little bit more. So it's 52.67 is where we are at the moment. So we're going to gap up, but within yesterday's trading range. So we're going to be around here. And even if we go higher, probably some sellers at the top of the trading range or yesterday's range waiting. Now, yesterday, daily chart, let's talk about it. I said that because of this, we need a second leg down because of this bear day, and we did get it. So I said this area, sellers are waiting, and if we do close a bear body, we're going to sell, okay? And we did. We actually gapped down a lot. And the market stayed below this level, so this tells me we want to test the low of this day, maybe even further down. What happens with the daily bar is that once they breach the range of this big bar and they close a day like this with a body breaking out, that means they're going to look for breakout targets. First target. Now, yesterday closed below the first target. We are bouncing, but we could continue to sell into this area. We might even sell. If market becomes bearish, we could sell into these areas. But we are testing below the moving average. We're at a breakout level. There's a small trading range here. Markets might come down maybe to these highs. We might get this today if we cannot go higher. And we continue to sell today. This is the area where I want to see a bounce today. But if we actually have a bullish open, which we're going to open up around 69.70, so that is right here, we're going right back to the breakout point. Probably sellers are here, okay? This is yesterday's high. We might even just go in a little bit. This is resistance, right? That bar is low and this bar is high. So here we might get some sellers. If we get those sellers, we continue to sell. Today we might actually reach here. That means market could turn bearish today. So that will be a big up, big down, confusion. I don't know, but we'll see. Or we're just going to go up and then we're going to get a bear day from the open. What about the bulls? Can we actually reject this? Because we already made two legs here. And this right here is being the support, okay? Market could actually bounce here, right? Where can it go other than just the breakout point of this day? Well, it could actually reach here and in this area, and we can make a double top there and then come back down again. And if we finally trap the bears, we can then go back to here. But then again, I don't know. This leg might require a small third leg, which can get us down to this target line. So I don't think the bears are done because of this body closing like this. So because it's too low, nobody wants to sell into support. We're getting a deep pullback into the breakout test area, which is right here, 52.70.75. I don't know if we would make any kind of double top with this. This is resistance here, after all. But if we do, I'm going to look for pullback and a third leg down. Then this is pullback. That's pullback. I'm going to look for a market to trap the sellers and go right back there once again. So that's what I'm looking for. But again, today is Friday, so Friday does wild swings. And in the afternoon, you get a lot of machines trading. So you have about this morning to trade with the rest of the market and traders. In the afternoon, machines are going to be trading. So they could do continuous buying or selling for several hours. Once machine starts to trade, they like to just keep buying and persistently either selling or buying. What happens is that the ATR value on the 5-minute chart goes down, like in between the 2 and 3. Sometimes goes between the 1.5 point and 2.5 point. And it stays like that for a couple of hours. That means that's steady buying or selling, and that creates a small pullback bull trend or small pullback bear trend, okay? So when those conditions set up, you just don't go against the market. You don't go against the price action. If they are simply buying and selling every small pullback, you just want to go with them. Okay, people generally lose because they have no understanding of how those machines trade. There are signs to read, and the ATR is my best friend. I see ATR value comes down, but the market is in some kind of trend. I never go against that trend. So what I do is, here's a tip for you. If you have your application that you use allows you, use slow RSI. Okay, RSI is, everyone knows it. It's just it's a good indicator. You don't really use it. I don't use it, but when small pullback bull trend or small pullback bear trend or any trend settings or conditions in the market, I look at this slow RSI on the 5-minute, and if it is in the buy zone, which is above 80%, and it sits there, even market is doing pullback, I buy every pullback because it's going to stay there until it moves underneath the 80% line. So that means you can buy every pullback, and I believe I showed examples of that a while back. And that's the only indicator other than ATR I resort to, which is a great indication that it keeps me in the trend and allows me to buying the pullbacks, which changed the way I trade it, and that's it's very helpful. So if you're interested, I can give you some settings on that. I use the one on Thinkorswim. So I have another computer open here with the Thinkorswim, and I always keep an eye on the slow RSI, not the regular RSI. It's the slow RSI. It's not the regular RSI indicator. Okay. So yeah, we're not indicator. We don't trade indicator with indicators, but a lot of people have such trouble with these small pullback bull trends. They always look to reverse it when it's not ready to reverse. So this way you can stay out of those mistakes. Okay. Anyway, so the market is at a support, and it's already bouncing and is towards here. So I want to know if there are any sellers there. Most likely they will try to sell twice. If we come down and test these lows, or at least halfway down, I'm going to look for buyers. But if we start to take out this line again, then I'm going to look for keep selling, steady selling into this area, and that is 52.21. We're about 40 points, 44 points away from this, and that's not a big deal on a Fridays. We could get 40 points. Notice the Globex session has a wide range, and we can actually reverse this halfway down. Okay, is because this is news, and even though the news bar like this should get a follow through, market can reverse that. Okay, and it could be a 40 point to the opposite direction. So you can see that I said don't buy this. Even if you buy, okay, so we did get a bull bar close, but what do? You don't just buy the close, you put a buy order above it. And if market is not ready to fill you and go up, it's not going to fill you. You're safe with a stop order. You simply are trailing a buy stop order until market is ready to get you into the accurate trade. It's not ready, so it did not fill your buy stop order above this doji. It's keep coming down because the limit buyers are waiting down there. So there is a much better price here, and those we need to get those limit orders activated first, and then now those stop orders above probably this bear bar, but it's identical highs, so you don't have to move your stop order from above this bull bar. You can simply leave it there. Okay, it's market when it's ready to break out again or test the highs, it'll fill you. Okay, and then you take profit here and you leave a runner. If you enter with a limit orders, you can either look for a bull bar first, or you place a buy order, but be prepared to buy again here, possibly even a deeper pullback. Because remember, this is an imbalance bar. Yes, it's a breakout bar, but it's also a leg in a trading range. Legs in any leg in a trading range reverses. It doesn't get a breakout. So the pullback could be deep. Okay, so be prepared to scale in if you buy at the 66% or 33% pullback from the high. The same thing. Okay, hourly chart here. Yesterday, this was my 8th bounce, but I said this bar on the hourly is not a good buy signal bar. And you're buying against a tight bear channel. Most likely we're going to have a double top here. I don't know if you guys ever paid attention to what I said yesterday, but that is your double top bear flag, and is bears trailing sell stop orders underneath this bar. Basically, this bar right here was your signal that you can trail those sell stops. And then this bar right here, bear bar, fills you and you are short. So what you can do now is initial stop there, 1 hour there, or more you can add here, or with the close, then you can readjust your 1 hour, and then that's where you are. So you have a double top. You can also measure like this. Here's a neckline. Oops. Here is stop. Here is your neckline. That's 1 hour. Or you could say, hey, I'm going to take this as my neckline, which is a logical thing to do, but it's just that risk is so far away, you still get your half R. You got to pay attention to the half R. When the risk is too big, I always pay myself at the half R because it can do a very strong bounce from there, and I don't want to be giving back too much. But to keep things in perspective, I can also use these, and then I look for 1 R. Okay, so that's what I would look for. You can also use that. Then that would be our 1 R, and that would be your half R. So you would get a 1.5. See that right there? Just about. Just about. You get your half R. If you want to expand profit taken, there's always a way to make profits, right? So here we go. We have now 1, 2, 3. Is unfortunately this here. 1, 2, 3. This bar wedge fails to break, reverse. So you count again, right? The market could actually come down. What it probably did is, right? I don't know. This is 60-minute RTH. We might actually, where are we now? So 52, that's 52.50. We are at 64, so we're going up. That's a pullback. We could come back down and make a 1, 2, 3 wedge, and then we could reverse back up, and that's what I'm going to look for. Then I'm going to target that area. That's where liquidity is. I'm going to look for a first rejection. I'm going to look for a second rejection. If we get above it, I'm going to target this area. So this right here, I've already marked as resistance. I'm going to extend that. Right? And then I'm also going to look for this area. If we do reverse back up. Some will say, hey, this is 1 leg pullback, 2 leg pullback, 3. Okay, then we made a wedge, and we might actually do a higher low and reverse back up. That's fine. Then this high is my target, not necessarily this one. Yes, we will get a rejection there, but we can easily break that and go back up if we get a bullish day, but I don't know. You can target this high and then look for reversal, but the reversal from there could be weak, and then we can break and go up here. I think this is a lot more stronger area, so I'm going to make that a little light. And let's see, so you have 1 here, or 1 pullback, 2 pullback, 3. So there's several different. I'm going to take that for any reversal for bulls. Just trying to find some projected targets. 1 pullback, 2 pullback. I don't know. Did that wrong. There. Did that one. So we are 52.61. Actually, pre-market we reached this area, and they're getting a rejection from here. So I don't know. We might actually come back down, maybe make a higher low, and then reverse back up. Because all of these people sold, they have their stop there. We have taken out, okay, this strong support, which is a structural. This whole thing, anytime you see a trading range, it's called a structure, okay? Structures are sound, okay? Think of a big building, okay, with foundation. This is a good building with a strong foundation broken, okay? So everybody else is now selling this. So when a structure strong like that is broken, that means these sellers have a reason to use this area as a major lower high. Major lower highs can be a good place to put your stop. So the market makers know, and they can run some stops, shake out the weak traders, make it look like selling, and then only to go back up again. Okay, so generally where the stops are put in, institutions can buy or sell, or some institutions sell, some institutions buy. We don't know which one does what, okay? But by looking at these places, these areas are generally where areas of institutional orders are resting. It could be sell stop, it could be buy stops. So that's where most of the orders are. And the market makers try to go in there and run those orders to go one direction and then reverse to the other direction. So that's why if you think that this is a good place that these sellers with two legs sold and there's stops there, best believe that we're eventually gonna get there, okay? All right, market is up and running. Get rid of this. Get rid of this. We have a slight gap up, but we are having a double top situation, and there's also resistance here. Yesterday we had a wedge bottom and reversal back up. So by 18 bar, 18 bar is basically 1.5 hours, like 90 minutes. You have a 90% chance. The day has already made either high or low. So remember I said they're going to Walmart this, and that's why I started to buy, and I said this is a good bar. I'm going to start to buy. I'm going to target these highs. I'm going to target this gap, right? If the gap doesn't close, then I'm going to look for sellers to come back in the markets and resume this trend down. So I showed you guys two options. There's a one bullish option that had a really strong buy to close small pullback bull trend that lasted and ended up at above the EMA. We did not get that. This is not a strong bullish move, okay? Because of this, and we're not getting any good breakouts from the highs with consecutive bull bars. So it started to become, this is going to get exhausted, and it's a trading range, so we're going to trap the bears. Then the second option was resumption of this bear trend. So it's important that if by bar 18, and this is what I look for, if market you think is making a strong, okay, reversal, and you think the market made a 90% either high or low, say it made, if the reversal is not all that strong, okay, next 12 bars, first hour, or 18 bars, or generally I look for 12 to 16 bars, or you're not getting 24 bars, that means 2 hours straight buying, okay. This is, yes, buying, but look at the bull bars. Big bull bar, then bear bars. Bars, and then you get this. So it's not all that great of a trend, is it? So, and we failed to close the gap. So then I started to look for sell orders, right? So here is new high, first sell, pull back. I sold that, and underneath the EMA, I even sold that, right? Is around this area is where we broke this lower high, right? So that means you come back and buy again. A market is proving to you that this was a good buy zone. That means when we get there, we're going to take profit because there are residual buy orders waiting. And hence bar 58 from yesterday bounced very strong because it hit a block of buy orders. So you had to take profit there. So then they broke it. So think of that as a structure, okay, broken. What do you think is going to happen when the market gets there? It's going to hit residual sell orders. This bar broke that structure. So why are we getting sell orders? Because anybody who sold here with a couple of legs down, they have their stops above. So they're trying to prevent bulls to break above it. So they are lacing this area with strong sell orders. There are already sell orders there. They might be adding to it just to block the bulls. But if the bulls actually break this, many bears exit out and buy that, and that could generate a bunch of buy orders and bull bars, consecutive bull bars. So it's important that you understand this. If a building foundation is broken, we get a couple of legs down, okay? If they cannot break this foundation, that means this is a strong building. Expect to go back up to the upper floors, okay? So think of it that way. That's how I learned to trade. I look at the stock market charts as a building, and someone explained this to me back in the day. You're going like you're in an elevator and going up and down, up and down. If you cannot break the ceiling, that means that's a strong resistance. Expect to come down several floors down. So this was the way that they explained to me. It just made sense to me back in the day. So I look at these trading ranges and support resistance as strong foundation. How strong is that foundation? So that's the one that you have to determine. Okay. Okay, so we have a very deep pullback, and I did say be prepared. We could come down to 50% and 33%. So now look, anyone who blindly bought one order there, one order here, one order here, already making money, okay, with their two contracts that they bought here and here. Actually, they bought here, here. So now they want to reach here so they can make money with that contract. Okay, but they are already making money because they scaled in at these levels. Now the question is, will the bulls close this gap? So that means the gap between this bull bar and the current bar's high needs to close if bulls want to get back up to highs. If that gap stays open, we can come back down to the starting point of this big news bar. Okay, so there is leg down, up, leg down, up, leg down. So we have actually a wedge structure there, believe it or not. Bulls are now breaking, right? So now the bears who have their stops up there, actually very upset, right? But this is also a big bull bar from yesterday. Anyone who bought at the support stock, right? Or anyone who bought here, it was long. Trap, they bought here, failed. Right now, they bought here. This is a good bar. So this is now your 80% probability. Market is giving you a break even, but the market at a 60% after a pullback can use this area as support and get to where they're stuck. It could be up there. It could be this right here. Market can get you there or the prior high. They're breaking the resistance right now. So when a resistance this strong breaks like this, okay, what do? Look left, okay, where can it reverse back to the old resistance and use it as support? If you see a tight trading range, heart of that trading range is an area where sellers are waiting. So you don't expect the bars to keep going up and up and up. You always expect a pullback, then use this area as a support, and then I look to buy again. But you see how that upper wick became so strong and then just came down. That's because of the heart of that tight trading range. Okay, sellers are still trying to prevent market to get up to where they put their stop. That's a lower high before this structure broke. So that is a major lower high. Okay. See, bulls actually close the gap. So now everybody both at the 66, 50, and 33% actually made money, but they had to scale in. So market could be going up there, right there, to that double top, to that green line. But we don't have two consecutive bull bars. We have a doji at the open and a breakout bar. You can use 2-bar to find your measured move. That is the measured move. It's trying to reach there. Probably. $9:45 in 5 minutes. We have important news coming up, so please be careful with that. We reached the measured move. Scalp. It's trying to reach the highs again because it is a bull flag. It's trying to reach the breakout point on the daily. Is mother bar, breakout, solid breakout, reach the first target. So it's trying to, because it's too low to sell, it's trying to reach the breakout point. There could be sellers right there. Be careful. And that price is 73.25-ish or 73.50, 73.25. Yeah. So it's trying to reach there. So if we do come down, this will be now support. I did say that we'll probably going to test this tight trading range for the second time. If the bulls break it, then we're going to go up to these levels. The 2R Asia breakout has not been reached. We left it behind, so it is a logical place for bulls to actually test. Might even go with 3R, which I don't have, but in a trending day, we could go the 3R, even 4R. So I don't have that, but since we have trend, I'm going to add that. Missing something there. I did not work. Or not. Hit OK. Use. Here's 300. Okay. Apply. Oh, I don't know why it's not showing. Anyway, so it could go up here. This is the target area. But for this setup, my target is 1/3 of this range projected up, 52.70, 750 area or 75 area. Market can reach there. News coming up in less than a minute is, 45 seconds left. So watch out. Is, 45 seconds left. So watch out. Follow through bar, but high of yesterday is magnet. Last week's low, magnet. Weekly highs and lows on Fridays are magnets. Monthly highs and lows are magnets. Mid-month also magnet. So pay attention. Open of the week, open of the month. These are all magnets on Fridays. You're in a trading range, so we're testing the upper third of this trading range. Okay, is big down, big up. There's a gap between the one high, not a good buy signal bar, so we might go and test its high. Remember, or if we fail to test the high and leave the gap open, look for a bar with a lower wick, pretty reasonable size, then the bulls will start to buy. But if we close the gap and test the bar one high, we could even come down further. But if we have something like this and keep the gap open, they could buy the close of that bar 4 and go up. Okay, as long as the gap stays open. But most of the buyers are living in this area, in this green zone, which is support. So they see a gap up, but not a good start, right? So think of it as a race start, and the racer, the runner, fell right at the, hang on a second. All right, so we're right there. Because it was a bad start, right? And you're testing the highs, market is now coming down. Wow. Okay, so we have a big up, big down confusion. Already market is now confused, but especially if we now take out the bar one low, we can come down, but we're gonna bounce now. So we're breaking what was resistance, now support. If they close the bar like that, okay, then we go test briefly, and then we could come down more. But what about if we don't come down and test the bar one low? Is this good enough to have a double bottom and then go back up? Oh yeah, we can actually have market start to grind up, and then EMA comes around, you look for a two-legged move, and then you buy again. So how this bar closes is important. Deep pullback. Anyone sold underneath this bar, stuck, they see a limit order market on the 15-minute chart, and then they sold the close of this 15-minute bar, coming back to where they entered short right there, okay, and they got a break even. So if those bears exit out of the market and this bar closes higher, bulls can buy that close and we could go back up again. But we are in a limit order. So you have up on this, down on this, or down, up, down again, up again, down again, and this is higher low. If it creates a higher low, bulls can still come in. But they have to weaken this bar first. So right now it's a break-even event, and anyone sold here is thinking market is going to come down to here, had a nice break-even, didn't lose anything by scaling in up there with the close because it's a limit order market they bet against. And at the open, you get these wild reversals, right? So say market went up like this, okay? At the open, what the bears do if they didn't buy, they start the trail sell stop orders. They get in and they make their money and they're done. And you can see that right here, right? Anybody, it was selling, bulls actually started to trail their buy stops above bars. They entered here and then they actually made money. And then bears now entering their sell orders and trailing up, now they made money, right? So it goes up and down until it finds a long-term directional move, which is a swing, which is Al's Walmart trade. Bears trying to close the gap. So now this is resistance again. Okay. But it creates confusion. Now I want to see if there are any buyers here. You have up, down, it is maybe up, down. We might need to make the third leg up to get a wedge top. Some will say, some will look from here, but I don't think this is accurate because this is the first leg up, pull back. This is the second leg up, pull back. Might need to get back up there. So is anybody who's bought above bar 2, utterly disappointed? They're looking to buy at a support, breakout, retest. They're looking for a bull bar to buy. So say we got a bull bar and they bought it, their break-even, early break-even is right there. Since we don't have that, I can't really measure. Or is with the limit orders, they're already entering at the breakout test area. So it is important that we close a bear bar above this line. Then the bulls will put a stop here and buy the close of that bar, and they're going to try to get to a midpoint of their original buy to get an average price. If we break that trend, the breakout test area, I would be careful buying. the close of any bear bar. And we are breaking it. So that means bears are gonna try to send this a little bit more down, but we will bounce. We have to test this area again due to those bulls stuck up there. So first breakout is reversal down. Bears see a bear flag, double top, lower high, and they want to swing down to these lows. So they see a strong sell. This bar is still going, so you can't really buy. These bears are still making money by selling higher. It's no longer a higher low, so now we have much bigger wedge, but it's now rejecting this news bar utterly. So what does this mean? It's going to test this area, and we could get a, look what happened here. We test the highs. We didn't really touch the breakout point, so that means they want to send the market down to here. So we could actually turn bearish, but I want to see how the market is going to behave here. If we close a bear bar, they're going to sell the first pullback. The target will be minus 33%. Probably buyers at the breakout test area, which is this 0%, starting of this news bar. They're totally rejecting it now. You have a measured move possibly here now. You have a measured move possibly here. But I expect to pull back first. I come down a little bit more to this area and then go up. Two strong bear bars create strength for bears. Many bulls are trailing buy stop orders, but it's difficult to buy. They might have a couple of points to make there with the reversal, but you got two strong bear bars here. But they will buy, and we have to get back up here. So if this bar closes bullish, many will try to bring market up to here, to here. So buyers are not so far away. They could show up here. It's the lower third of this big bull bar, news bar we're testing. So I want to buy, but I can't establish my data connection with my broker, so I can't really trade. Having a hard time since the news bar. Okay, I'm in now finally. I'm not ready to buy anything. It's difficult to buy. Probably sellers at the high of bar 5 waiting. There's a little bit more room to downside. Bears can continue to sell into 52.50, 49, 45 area before finding any buyers. So I'm not in a rush to buy anything. This is still selling due to two bars. 4 and 5 are very strong, and it broke a structure, so we didn't get the double bottom buy. So market is probably looking for some kind of a measured move down. So I'm going to give these bears a little bit more room here, and then see if I can actually buy and go long. In the morning, Matthew 5, if you're watching, it's not only information overload, it's very volatile time, okay? Especially Friday with the news back to back, right? So any morning, if you read the blog every day that Brad and on the weekends Andrew posts, okay, is Brad says religiously, try not to trade the first 6 bars. Just step aside because market, if it's buying, sellers are looking for a backdoor to enter. If it's selling, buyers are looking for a backdoor to enter. It's going to do quick reversals is in the morning, okay, until it finds its swing. So things are going to go against you. So we have to read the both sides of the market. Look, you have a quick breakout at the open and immediately reverses. Why? Look what you're buying into, right? So there was resistance here. It went up a little bit. You have 3 bear bars, 3 consecutive bear bars from yesterday, 57, 58, and 59. And that first bull bar represents a sell zone, and they immediately sold. What is this? This is a strong move up. Now is a strong move down. What does it say to you? That is confusion, but there's a gap here. What happens to the gaps early on? Generally, they get closed. So the bears are trying to close the gap. So this is a structure. So when something like this is in front of you and you have a strong bear body like bar 5, you can actually measure and find your approximate either from there or from underneath bar 4, your measured move targets, or look for this gap close, okay? So yeah, I mean, yes, information overload, but you're going to see this in time, in history, many times. This day, this morning has printed exactly like this, so you get used to it. So you're trying to trade, you're trying to become a professional in a business, in a profession that is the hardest. It's not easy to trade. Trading is very difficult, very risky, very stressful. Learning takes a long time. So don't get frustrated just because you're getting a lot of information, because there are a lot of information, okay? Millions of trades taking place here, okay? Millions of dollars are being poured into market. So you're not the only one. So you have to give yourself a couple of years to get really good at reading this if you want to make consistent money. It took L 10 years to get where he was. So think about that. You're not going to become a good trader. You might, I don't know. Everybody's learning curve is different. Practice curve is different. You know, how much they dedicate time is different. I don't know everybody. But if you dedicate enough time, you get there. So yes, there's a lot of information. And that's what I used to say when I first joined L's trade room. I was like, there's too much information. I don't know which one to process. Then I started to look at the behavior, you know, in the open, during the open. And I realized that market reverses back and forth until it finds the swing. So it found the swing here, right? It's kind of swinging down, but look where you're swinging into, a gap and a support. So as you sell strong bear bars, like if you sold underneath 5, you made money. But everybody knows that there's a gap here. The bulls are going to try to prevent this gap from closing. So you take profit, right? So if you can grab a 5 point from there, say you sold a 5 low, that's your scalp, and you leave a runner and expect these bears with that runner to close this gap. If they cannot close the gap, you get an inside bull bar. You might want to exit above that bull bar because it can reverse back up if the gap is stay open. So you're going to have to think of those things. But how would you learn fast? You're going to do what I did. Every evening, you're going to dedicate time, okay, alone. After the market closed, you're going to study. Go grab food, go grab coffee, whatever, tea. Just go in there and study and study. What could the next day do? Find what today or yesterday did. Go back in time and look at possible outcomes the next day can do. There are 3 different charts, in fact, 3 different scenarios. This is one of them, okay? Study that on the weekends. I wake up very early on Saturdays and Sundays while everybody's sleeping. And like I literally wake up 6 a.m. and I dedicate 3 hours. When everybody's getting up around 9 o'clock, I've already put in 3 hours of practice. Okay? That's how I got good at. And I still do stupid things, but I'm able to fix them. If I didn't do all that work, if somebody hired me to do a job and give me a director's or vice president's salary and I cannot perform, what do you think is going to happen to me? I'm going to be fired, right? Because I'm not performing. I don't have the knowledge and the skills to do. I'm just pretending to be someone. I'm never going to get that salary. So you have to have the experience to get paid. So trading is like that. If you don't have the experience, you're not going to be able to get paid. You're just going to blow accounts, lose money, so and so. So there was a 5-point plus scalp because why? ATR is more than 5. So it drift more than 5. If you sold here a reasonable bar to sell, ATR was around, at that time, it was 7.5. So you got 6.5. Okay? So you got a 5-point in there. Anything more is extra. You should be scalping that 5-point. So now what do you see? Bar 7, right? Is bar 7. 10 o'clock is considered news, although we don't have anything scheduled, but the machines know something could happen here. So with the bar 6 close, they continue to sell because that's bar 6 is a follow-through bar. So expect follow-through. Then this happened. Why? Look left is, what do you see here? Look, if you find this bar, lower third, buyers showed up, big bullish move up, right, at the open. That's after hours. But that means at the lower third, there were buyers. When it comes back to that lower third or the 50%, they're probably buyers. So it bounced, but it could continue to come down. So we need a bull bar to buy. We don't have a bull bar. We cannot buy. Anyone who was still selling, disappointed, they sold again at the high of bar 7, trying to reach the 50% of this doji. That's why I say you see a doji, you don't buy it, especially if it's a bear doji. Expect the 50% to be tested, at least 33% pullback. Then you look to buy. So what do you think the bulls are doing, right? Bulls or traders who have not sold this, what do you think they're doing? They're trailing their buy stops above this bar and that bar. Now waiting above bar 7 to get filled because they see a bullish pressure. They want to enter in the market when it starts to reverse. They want to grab 2 to 5 points and then see if they can get a runner. It's just bar by bar analysis is the only way. I thought that I could conquer the market with just trading patterns. You have to have a really big account to be able to say that, okay, this pattern went against me or it's not doing what it's supposed to, it's got invalidated, right? You have to have a really big account. By the way, with small accounts, is the returns that you're looking for, you have to trade really well to make really good money. Like, think about it, right? A 5% of a small account has to be really decent money for you to say that you're making a living. So you're not. You're going to be frustrated growing that account and you're going to lose money because you will be trading a lot more, okay? A lot more of your small account to make a lot more. So that means frequent trades with large amounts that your account cannot handle. But if you have a large account, then only 3 to 5% of that account will return really good, decent money with less frequent trades that you take during the day. So what you should do, and I made this mistake, I'm just going to be conservative. I'm not going to start with big accounts. I'm going to start with small accounts, and I blow and blow. By the time I put together that money that I wasted, if I were to wait it, and use the bigger fund account, I would have a bigger risk tolerance and I would only trade once or twice a day and still make good income. So if you're not a good trader, okay, save your money and your time and frustration. Sim trade it and put the money aside, save that fund, okay, or go test it out with some funded account challenge and have that company pay you and generate the funds that you need to trade that way. But don't use your own funds. If you don't have decent amount of money, okay, with your broker, you're not going to make money. you're just going to lose. You're going to put a $10,000 there, and then that $10,000, before you know it, is going to become $3,000. Now you're frustrated. Now you're trading to break even, not make money. And that's not good. So don't even bother trading with funds if you're not good, if you cannot structure a trade, okay? That's what the sim is for. That's what the funded companies are for. You can use small amount of money and test out. I won't even recommend that. Don't approach any funded company if you don't have the knowledge and skills. You're just going to keep paying these guys a ton of money because you don't know how to trade. So just save your money. When you're truly ready and every day for 3 months you put in the same trade and be able to make money every day consistently, then you take your like $20, $30, $50,000, move into a good broker, reputable broker, which futures brokers are reputable in the United States. You will be able to make a $500 every day. That's a senior manager position, daily pay income, or a junior director in tri-state area in the United States. No, I don't generally trade half R and 1R. I do look for, always strive for 2R or measured move targets, but I have to pay myself. So I always look at half R as a threshold. Is the market going to go test that and reverse back up? Maybe I can pay myself a little bit there, okay? And then if it continues to come down to 1R, that's great. I have already a runner running. But I always pay myself because S&P is known for its back and forth trades. So, and it goes into trading range a lot more frequently. So, especially in the morning reversals, you don't get these, okay, swings in the morning. Look at this. So, tell me, where is the 2R trade here? Market started, 1, 2. You don't see any of this. Where is the 2R trade here? You took a trade. Where is it? So you sold underneath 4. You put a stop there. That's great. But look at the bars, right? So now what happened? Now you're panicked and you're out. So maybe you bought that. You exited and you bought that. So now you're looking for your stop here. You're looking for bar 1 high. So if I measure this, you're buying in the trading range, right? You're buying in a trading range. What happens in a trading range? Do you get a breakout? No. Your target is the upper third of the trading range, bar 1 to bar 2, right? So if I buy above bar 5, if I don't take profit, I'm expecting 1R and 2R. What happens? It reverses. But if I were to take profit at half R, did I make money? Yes. And this turned on me? Yeah, I don't care. I made money. It can take away from the money I made. I will not lose anything. Then I can look to sell. What do I sell then? Okay, good bar. I'm going to put my stop there. I'm going to measure from this. I'm going to look for 1R, 2R. Probably they sold the close, so the 2R is right there, right? I don't have to take profit at the half R, but I can pay myself. This bar just buzzed through it, so I'm getting that 1R. And here's a 2R, and that's a 2.5 right there. And what happened at the 2.5? The half R is a threshold. It's basically telling you market could turn around there, okay, or reverse there. Or it might give you more information, say, hey, I'm not going to the 1R, so maybe there's an opposite trade, could give you 2R, get ready for that. That's how I use it. All right, let's get back to the, it's an experience thing. You'll see it. My job is to preserve capital first and then make money. So look, we're going to the, basically measured move is market is selling. So if you were bullish, say you're looking for a backdoor to enter, right? You're trailing a buy stop. You put it 1 tick above bar 7. Did you enter? No, you were safe. But if you were to buy this bar, you're done. You would lose. If you're looking to enter into a reversal trade, market needs to sweep you into the trade, and that's how you enter with stop orders. You wait above bars, right? So. But what happened there? You never got into that. So you cancel it because bears took out the 50% of that bar. So now you can actually put a sell order there. It would sweep you in. You still make money. And this is why L says use stop orders, not limit orders or market orders. Just use stop orders. Just wait for market to get you in the trade. It'll give you a 1 point if it cannot go further up. That's the minimum. So here is the measured move target. So that's pretty good. So if you actually measure, you put your stop there, we could get a 2R right there. So anybody sold with 1, 2 strength bars, it's going to get a leg or 2. Here is leg 1, pull back, leg 2. We might get another small leg, big bar, so you're going to get your 2R there. We always strive for 2R, but you don't always get it because you don't get these trend from open all the time. Okay, so we got the 2R, we got the measured move, and magnet is right there. We have head and shoulders pattern, left shoulder, head, right shoulder. We have a bigger flag there, wedge flag, pull back, lower high, and it might continue to come down, but we are at a support. I just want to see what's left to this. Just give me a second here. And it's also area of interest and support. Take that. There's no gap there. Just gonna take here. So market could continue to come down to here if it wants to. And now what happened is if you just trade it with the 15-minute chart, look what happened. Once we take out the 33%, right, we had a bounce. So those bulls did buy the pullback and made money, but bears now took out the 33%. That's signaling me that market is trying to invalidate this bad price action. So market thinks that this is bad price action. It needs to be corrected. That means we have to go test that low. We have closed the bear bar, right? Now, if we take out this, that means we're going to come down the first target and the second target. This is where I would like to see a pullback, and this is where I want to buy. But it could continue in here if it wants to. I'm more interested in this to be tested so I can buy and make a few bucks. So I want to see this tested. We're closer to the Globex, but we could also have a double bottom at the Globex and not get a breakout for bears. We have a wedge bottom, higher low, and we could still reverse back, but it's a big up, big down confusion that could create maybe sideways, or we're going to reverse this down and get a measured move. I say there will be some buyers here at the minus 66%. We're so close to here also, so I'm going to wait. I'm getting ready to buy, at least for a couple of points, or because I didn't trade this. I was busy answering questions. Yeah, that's true. I mean, who cares? We trade the price, not the news. So when a big news bar or any bar like this is challenged and invalidated, that creates a what? Confusion. Big up, big down. That creates, what is confusion? Trading range. Sideways trading is, but because it's so long, right, the distance is so long, so trading range, the reversals can be also big too. So the bears making money, bulls can make with that reversal also a decent amount of money. I guess, you know, something, if I learn one thing from trading, and I'll share this with you, is that time is on your side, okay? You just have to be patient and give yourself enough time to really learn it, right? So you can take the assignment and just ace it, right? Just do great about it, good job about it. So you don't have to worry about time. Take all the time you need to absolutely observe. And then, you know, the trades that you open, maybe you open 5 trades. From that, 3 of those are great, only 2 are bad. You still make money. And in time, 4 of those trades are green and 1 of them is a small loss. Then you're becoming even better, right? So you want that. But you don't want, you open 5 trades and 4 of them are bad, only 1 of them is good. It's just, I mean, you know, it's not the way to trade. You want consistency. Looks like an inside bar, but we still have room to downside. I like to see this area tested before I buy anything. And we haven't really tested minus 66% yet. Strong bull bar, so probably 2 to 5 points below, maybe even 10 points below bar 77. Buyers are waiting, and when they buy lower, they will make money with the pullback. The goal is to get to the open of that bar and go beyond it. So market, even if it comes down, it's just going to go up before coming back down again. So that's where anybody who bought here will make money here by buying lower. So I do expect market to come down a little bit more, but buyers to show up soon. So generally what I do is if I see a strong bull bar like that, I start to measure 2 to 5 points. And that's right there, 5 points, the perfect area for the first buy orders to be hit. But it could go 10 points if it wants to before. It could be between 10 and 5 before reversing back. Then I target the low of 77 and then the open of 77. And I start to take profit because there could be sellers waiting there. Oh, are you in Orlando, breakout man? Yeah, that's right. Everybody's arriving. So it's starting tomorrow, the first day of the event. And then I think team is getting ready at the moment. My ears were ringing a lot yesterday, so I'm guessing. I'm just kidding. I'm very sad that I'm not there, but I just didn't have the energy to travel anywhere. And my doctor said, best not to travel until the end of the summer and then you can start to look for travel. So I missed the event, but hopefully the next one, I'm really hoping the next one is going to be in New York City. That will be really awesome. Then I can take you guys to my favorite blues clubs. We could do a lot of events when, you know, sightseeing. I mean, Orlando is hot. Everyone is walking around with their portable air conditioning, basically. But if we can make that happen in New York City, imagine how much fun we could have. All right, so we reached the area. It's also, this gray area is the first 6-bar breakout, opening range breakout, measured move target, that little gray dash line. I'd say, start taking some profit here because I think it's trying to get to like 9-10 point. It could reverse soon. I'm waiting for a bull bar. There's a bit more room to downside, even if it looks like an inside bar. Don't be fooled for that. It can still come down. But if you do buy, target the 77 low, but we may not get there very quickly. There's a resistance there. I don't care about this anymore, so I'm just going to take this. Here is resistance. We could test this area, not be able to go higher. There's a 40-point target for bears we just left behind for a couple of points below. Starting at 27.75, could go to 26.50, 25. We could still come down, so watch out. Bears can still push this down further. But you can see how that worked out. So it hit the buy orders, right? So that's 5 to 10 point, I said. But we could still come down and tag that 10 point before going back up truly. So I will not fall for this bar. Yeah, Ali, I haven't met Ali Afshari. I'm really looking forward to meeting him. He's got really good automated systems. If you guys are there, just pepper them with questions. Just try to observe as much as you can. I mean, both Ali, Brad, they're brilliant people, brilliant minds. And Brad actually is, I think, works with Ali Afshari too, so he'll answer all your questions. Oh, you couldn't find that? Okay, I'll post it right here. No, I think I posted under it's indicators and scripts, but I'll post it here again if you couldn't find it. Sorry about that. I thought you'd be able to find it, but that's all right. All right, so it's a good pullback. We just pulled back to the 77, but there could be sellers here. We left an important zone down below. It needs to pull back a significant amount, but it can come back down again. When I see a 40-point down below here, I don't like to buy right away. I expect that big ticket item to be tested first. So if I measure from here, we already probably reached the 40 point. That's why some machines measure from the pivotal level and they see 40 point and they're taking profits. But we were up bullish all the way to the bar 3 high. So the selling began with the open of bar 4. So this is the true 40 point, and we could come down and test that before. We might even drift 5 more points before reversing. That's why I don't like to buy quickly. This can come down more. See how it's coming down? It's going to want to hit the 40, and it doesn't need to stop there. It can come down a little bit more, maybe 4 or 5 extra points before reversing back up. We're right at the 50% of the zone. I don't know if I did a good job finding the bottom of this support. It could be a little bit lower. I only took parts of it to keep it tight. But you see right there, that's a 40 point to the tick. How important is that, right? But it could come down a little bit more. Generally ATR is very strong. So it's going to overshoot probably maybe 4 or 5 more points before reversing back up. So I have no rush to buy anything here. I didn't buy this. And from here, 10 point, that's 11, that's also 10 point. So now I'm looking for buyers, but I'm still not ready. I just wanted to come down a little bit more. Look what we reached from this big ATR bar. Failed to break out bullish, but buyers bought and made money, exited out with this bear bar or under it, and then they reversed it and they made money into the 33 minus 66 and 100%. That's the measured move of this failed news bar or the breakout bar. So I developed this method by just using an ATR bar, meaning that the ATR average true range was so big, therefore it's a breakout bar, only to use its body, not the wicks, and find approximate breakout targets by using L's 1/3 range method. So I'm basically adding those 1/3 of range of that bar and looking for targets and scalp those levels, which also gives you a good swing targets. Now I'm getting ready. Okay, I want to see now bulls, but this can come down another 4 or 5 points. Might actually test 52.25 also, but it's going to reverse soon. Now look left. Bulls couldn't get the 2R. Okay, extended up as much as possible. Now bears are trying to get the 1R. Okay, to the downside. So what happens if these bears continue to sell more than 5, 6 points? So that's 40 plus 5. So 5 points the scalp. If they close beyond 6 points, then 46 points. That means they're going to get their additional 10 point. They could get to the 50 point area. So I'll add so they can get another 10 point swing in the 50. Let me see what 50 is. 50 is 1825. 1R is 2150. Yeah, I mean, we could reach there and then bounce up finally. So I'm not ready to buy until I see strong bull bars. I'm going to let them keep cashing in. So that was 40. I'm looking for approximately another 4 to 5 points before getting exhausted. If it gets exhausted. Otherwise, it can get another additional 10 points. ATR is 7. It's pretty healthy. You can see that the market. But when it starts to reverse, your minimum value of making money bullish is going to be 7 points. So I want to grab that 7 points, but I'm not ready to reverse this. This is bottom picking, and it can hurt me. So I just have to wait. See, it's coming. That additional 45 is, let's see if they can reverse here or later. You mean the daily pivots? Yeah, there's that indicator you can use, definitely. I mean, it's just a bunch of lines. You can use it. But then again, you're having a trend day. So where do you think on the daily it's going? What did I tell you guys? We're probably going to get that target. So 52.21 we're getting there. We might even test this, 52.17, but I'm more interested in this right there. Moving averages there's something here. There are two moving averages are stacked, which is, I believe, I don't know what this is. Oh, this is interesting. Give me a second to understand what that is. Oh, I see. The black line is 200 SMA, and the red line is 50 SMA. On the daily, it's overlapping. So that means it's a good confluence area. Today, we can even get there. Like, we could bounce around these levels. Market is searching for support. There's a good breakout right here, right? Good breakout. And this area seems like, first I want to see a bounce here. But if we continue to come down with the same bar after bouncing and then coming back down, this area is going to be the follow-through target. So market can make today 40 points plus 10 to 20 points extra, but I expect a reversal soon. So bars getting smaller, but still is a little bit more room to downside here. I did say that we'll probably go to test the 25, 52, 25. We tested, but could continue to come down more. But I'm looking for a bounce soon. Here is 1R. We're just about to get there. 21.20, 22.50. See if we can reach out and grab those. But 40 point tested. We're testing underneath. If this bar closes bearish, we're going to continue to come down more. But market will bounce soon, at least at 10 points. Could you tell Breakout Man, Ali Afshar, to set me up with his system, because I'm dying. I'm a big fan. I've been watching his webinars from the last events religiously. I even took some notes and like failure of a failure. Like that's his deal. So ask him about that. I'd love him to actually hook me up with his methods. But I haven't met him, so I never approached him properly. So put a good word in for me. I'm just kidding. You don't have to do anything. Okay, so we're getting bounce and profit taking, but still not all that great. I'm not interested in buying just yet. If we start to take out the 52.30, there are sellers up there, 52.30 to 52.35, 32, 33 area. Is if I start to see bulls closing above this bar 13 high, then I might buy into this area, but I really don't want to go against this bear channel without seeing strong bull bars closing on their highs. You can take that, or then you would, that's a bit better, isn't it? Yeah, that's a better fit. So now, get rid of that, do this better and clone it. Okay, so that's much better. And then take the mid and just apply, give or take, would say, let me see. Yeah, I guess get rid of that now, that's better. Good bar, 14, but bears want to keep selling above it, but I think we're going to have to go up a little bit. You're buying against a very tight bear channel here. Okay, is probably sellers a little bit higher or right here. So I have not bought anything. I am trailing buy stop order above bars. Is my buy stop is sitting above bar 14. There are sellers here, I said, so I wanted to see market going up a little bit, but bar 13 is a good bar. So now we have a, if this bar 15 cannot take out the 14 or 13 low, that'll be a micro inverse head and shoulders. We could start to get bulls, but if the bears start to take that out, then we're going to that 45 point area. But if this starts to reverse back up, I might start to look to get in a long trade above the bull bar 14. Otherwise, not buying with limit or any kind of market order or limit order. Market order meaning buy to close or sell to close. Market is still bearish. Don't go against this tight bear channel. It's too, if you're going to want to enter only buy stop orders is above bull bars, you wait until market is ready to reverse. Then they will sweep you into the trade. Then you look for about 5 points or so scalp, and then leave a runner if it, if it goes higher, you make money. On the daily, we still haven't met my target. We're getting very close. I like to see 21.25 tested. So it could drop another 5 points. That's what I'm worried about. Now, because you have a strong move down, and look at the breakout bars, you'll determine that this is strong enough that the pull back to EMA, we could make a double top and continue to sell. We might even keep the gap open. So I want you guys to be careful there. Is if you're looking for full reversal, we may not get that. Buy stop orders moved one tick above bear bar 15, but it's a strong bear bar. But the buyers are waiting there. So you either wait above 14, or you're looking to enter above 15, but you only wait with stop orders, okay? Because we may not go there. We could just keep selling. 15 is a really good close. Market could continue to come down even to this area. But I'm expecting some kind of a pullback. If we start the move underneath 52.25, expect another 5-point or so down. Tested like 22.20 area, or this target rate here, which was 21.25. The channel extension target is right there. Is the 2 times the measured move of opening range first 6 bars or 30 minutes target is right there, which is the 50% extension of the channel breakout. But I prefer a pullback. It's too low to sell. Just waiting for bears to claim their 1-hour target of Asia breakout. If this bar closes bullish, we're going to go test the 13 high. Is possibly even is upper third of bar 12 wick, somewhere around, if we can get to 52.35.50, but I think sellers waiting at the high of bar 13. We made a new low, so we could continue to come down perhaps, but bars are getting smaller. I prefer to sell higher. Bears already taking some profits. I like to see a pullback. Sellers probably up here. They already did sell with 12, so probably going to get back up there eventually. More room to downside. Like I said, this is the target, so we're going to keep pushing into 21.25 area. Is before looking to buy. We do have a micro wedge here. Is right now down on this, up on this, down on this, up on this, down on this. So we might get some kind of a reversal, but there's nothing here yet, right? No bull bars, no nothing. There's a micro wedge there, and you have a spike and a pullback, bar 12. So eventually we will go and test the bar 12 low, bar 12 midpoint, bar 12 close. Sellers are waiting up there. We are going to pull back there, but I needed to see this micro wedge first. So there is the micro wedge. And it can reverse. It can go up to bar 12 low, and there are buy stop orders above 16, bar 16 now waiting, lower down onto the bar 16. So we could just go up about 5 to 10 points suddenly, although, let me see. 10 points is not a big deal at this point, because ATR is kind of large, but we need a bull bar, right? So no one's going to buy or even attempt to buy if there's no bull bar. So the buy stop orders are above. In case we start to reverse, everybody wants to get in as quick as possible above bar 16. So they keep lowering those buy orders onto the bars. And sellers also know that any reversal could reach bar 12, so they could be trailing their sell stops, okay? Sell stop meaning as they're selling, if market reverses, they're just going to stop selling right there automatically. So they're protective stops. So that's why. But how far can we go? Not far. Probably the test of 13 high, 13 open is 12 close, 12 open, 12 close. Yeah, that area we might test before coming down again. Bears are still happily selling and they want the 21.25. I lowered my buy stop is above bar 17. I entered and I'd already scalped, except the widen it. Wow, something weird happening with my broker. I'm closing in, I hate it when this happens. It's just, you close it doesn't close. You close the trade, but the chart is still going. It's like, how is this possible? Anyway, so I just closed in green. It's just going to these, once I get spooked with this broker not performing my executions correctly, I don't even care even if I'm making money, I will flatten the account, because that right there, there's something malfunctioning. I'm not taking risk here, because even if I move my stop, it's probably not going to recognize it. It's just something is not talking to the broker, either on the NinjaTrader or the broker side. So I don't care. I can open another trade. I just don't care to linger. It's okay. I can make money another time. You guys, you can make money. So anybody lowered their buy stop and looking for kind of a backdoor to enter above 17, I did say we're going to go to the bar 12. There is resistance here, but this is where I would pay myself, because we can come back down once again. All right, so. Okay, excellent. Yeah, we could go back to EMA as well, but bears will try to keep the gap to EMA open, but we have a small trading range here. We could continue to go up. The resistance there anyway, but we have left this behind, so bears will want this target. Okay, we might even push further down, because look at the bars. Okay, bars are big and it's getting follow through selling. So it's big bars, follow through, follow through, follow through. So there's 3 legs here and it's a parabolic. Okay, it's a very I should say, well, climactic is for bullish, but you can use climactic for bearish as well. So let's use the parabolic. So it's just coming down in a very steep angle. So therefore, any pullback could be minor, and market could want to use that area as resistance and then come back down once again. Okay. So bulls are in a rush. They kept scaling in. They're in a rush to get back to the low of yesterday. But if the bears keep the gap open to the EMA, we could come back down more and then reverse back to the EMA. So far, it's 18 bar. It's trying to reverse the 18 bar. And the 18 bar of the day, which is hour and a half, you have 90% probability of that you might have seen the low or the high of the day. So because the selling is strong, we probably already have seen high of the day, right? I don't think this is the low of the day that we will make new lows. So don't be so excited about a big reversal up here. So for example, we could have a day like this, okay? Up and reversal down, gap down we could get as close as possible and then fail, come back down, try again, but we could keep selling. The rest of the day looks like this right there. That could put us into a trading range rather than reversal, okay? So don't get too excited about a big reversal here. This is a hard trend. We'll want continuation. Now we have a gap bar. It's got a very visible upper wick, but it has a gap body. So what does this mean? Well, bar 17 is okay by signal bar, but it is a doji, so at least it's not a bear bar. Market wants to go and test the high of that bar, but we can, because it's a bullish bar, and then bulls entered above it, they're going to try to keep this gap of bar 18 open. So they will look for more move upside. So basically, the upper wick of bar 18 makes the bar 18 rather less reliable, but it is decent bull bar closed above its midpoint, still reliable enough for traders to expect follow-through buying into the 20 EMA. However, we may not be able to test the 20 EMA and keep the gap open somewhere around here, right? And then come back down. Or we come back down a little bit, go back and test it, make a double top in that process, wedge top, and then continue to sell. I know you guys love my pen drawings there, but you kind of got the idea. So around here, we could get a rejection. Right now, they see bar 17 as a bad buy signal bar, but to me, it's okay, and there's a high chance of market keeping that gap open. Okay. If they close the gap, we could still make a higher low. Oh, they just closed the gap. Okay. I guess they don't want to go up. So we did test the bar 12, so I took profit there. I was like, flatten. It's just that if we make a higher low, we'll just go up again. So it could be 2 legs, 10 bars to EMA, but we could still keep the gap to EMA open. And that broker thing just gave me a quick heartburn. I'm going to grab some water and be right back. Okay, so we are back down to the wedge, micro wedge bottom. Have a double top with these. I did say the sellers are probably at the high of 13 or the close of 12 is low of 12. So right in that area. That puts us into a limit order trade here. So that market is betting against strong bull closes and strong bear closes. We don't have a higher low. 19 made a new low, so it looks like this is an institutional area that institutions are trapping each other. Just be careful here. They will trap you along. We have an outside bar. Outside bar 14 is followed by inside bar 15. So bears are trying to get a breakout with a body from the low of 14. That could bring us down to the 21.25 area. Okay, so that's why I said don't get too excited about a reversal. We could continue to come down because it's a bear flag at the moment. But the machines they see a bull bar being rejected at the close and then the bear bar kind of rejected. Machines will try to buy it, and that's why you got that bar 20 is upper wick. So I think we have not seen the low of day yet, but we definitely saw the high of day, so market could continue to make new lows. 22.25, 22.50, 21.25 is still target. But those are higher time frames though. And then there's this one on the hourly charts, which is a big target. We could continue to go down, 52.18. I want to check something is on the, oh, that's daily. Oh no, I don't have a weekly chart here. Oh. It's loading. Okay. So on the weekly, you look at prior week's lows, like this low right there is 1575 2 weeks ago, or 16. Yeah, 16. Or this week's high is 16 to 1250. We could pull. Market could reach, but again, this is monthly, so it's not going to be all that fast, but it's trying to get to these highs. Probably there were a lot of sellers here. They're stuck. They sold higher. Is anyone who sold, sell again. Maybe they sold the close. They want market to come down to here. Or accurate way to do it, anyone who sold underneath this bar, stuck, or even here, they sold the close and it goes back up again. They want market to come to here and here. But strong is tight bull channel. The first break of the channel, immediately bulls started to fade because they're stuck up there, so they're bringing it. So if this month closes for some reason on its low, that means those bulls are breaking even and exiting, and then the next month could become a second leg down. Even though we made a new high, it could be a second leg down. We could test this month, so it's April's low. We could test April's low. So we could close somewhere near April midpoint, or I don't think we're going to be able to close this month up high. We have to get a major reversal today to get this bar going up. So I don't think that's going to happen. We could actually test April midpoint. Just give me a second here. Well, this doesn't look right to me. I did something there. Oh, duh. And that's April low. So they're continuing to sell to reach that target. Your buys are limited. That's April mid. This April high right here. Good. Okay. That's locked. And all right, I think I'm all set here. And then I should do 5 minutes and done. And then I should do 5 minutes and done. We could even reach here, but I'm more interested in 21.25, but it could drift down. It's a bear flag. It's basically channel down. If we break that midline, we're going to reach here. We could even get extension. So we're gonna set climax down. We haven't even had an attempt to test, but we will get to the EMA eventually. But first, we need to keep going. And then I'm going to look for a good sizable reversal. This is missing the moving average, but you got the point. So we got a bit of a pullback, but it continues down with this bear flag formation. And then I'm going to look for consecutive bull bars before I buy anything. Okay, if there's nothing to buy here, just it's trying to reach the target at the minimum, but it can drift further down. And then it'll probably put us into a trading range rather than sharp reversal. If we had an early on sharp reversal, is like this, you would expect reversal back and sideways, and then you would look for a bullish breakout and reversal strong. But we never had that, so we kept selling. That minimizes or lowers the probability of getting a sharp reversal. You do have one pullback, two pullback, or one pullback, two pullback, three. So you have a wedge bottom, much proper wedge bottom. Now, I need to check something because I'm not really snapping these lows and highs. But it's just, it doesn't make much difference, but you're on a daily chart, it could. Okay. Yeah, 21.25 is still valid. Not interested in buying anything is until I see that price point is tagged. The question here, what program, or if not a program, what key comment are you using to access your free hand drawing tool? I search Google and not getting the correct answer. It's a paid tool. It's these kind of tools, you won't get anything free. It's called Pointer Focus. We're gonna reverse soon, just waiting. But like I said, this is coming down pretty nicely. Now, if you look at the indicator that I talked about, now look at the ATR. It used to be somewhere around 7, 8, came down to 4, but it's still pretty strong, right? Anytime it moves underneath 3 in a trend like this, then you have a small pullback bear trend. But if you look at the slow RSI, you're going to see that it's going sideways and inside the sell zone, which is below the 20% level. So 0 to 20% is a sell zone, right? As long as it's there, they're going to keep selling and selling and selling, right? So if you use that kind of indicator, it also tells you that it's trying to reach somewhere. It's just not ready to buy anything. I don't know if we would get there. That's kind of far. Well, about 20 points away. We could get there too. Sometimes the days like these, you get 240 points stacked. You get 80-point trend before we reverse up. The early on is we already reached. Then I would, I think maybe I'd take that one. Okay, that's a little better because this is already an important area. But we do have a wedge bottom here, and the channel is, highs right there. Eventually, we will come down and test there. No, maybe like that. Maybe like that. So here's a wedge, pulls back eventually, and then continues to sell, gets another 40 point or so before doing that. Just waiting for that target to meet 21.25 at least. We could dip lower, but kind of an important level for me before we see a reversal. I'm using 4 Petromen. What application are you using? Some ATRs are like complicated. I use 4, period 4. All right, here we go. We're about to test that lower line, but that could be also like that. All right, Asia got its 1R. Probably trying to get to the half more, so that minus 166 could be next, and that's 1550. So the 1550 is right in this green zone, buy zone. We will test the EMA. It's been more than so 5. It's been about 20 bars. So since bar 5 we started gap down. It's not more than 20, but we will eventually go back to the EMA, but it's just not ready to do so. Like I said, nothing to buy here yet. It's been 20 bars so far. So the first touch of EMA, I'm going to look for some kind of a double top at the EMA and sell again. All right, so we met this target. I've got an extension, 25% right there from the channel. We trapped the bulls right there. We didn't even test the plus 25, so we're coming down. We could breach that channel line, the micro channel line, and an extension. And then the next target is 1550. I'm sorry, 1750. But it can continue down to the 1575, 1550, which is the high of this. Some bears measured the first leg down, so they got it. Now there's extension. You can even measure that way if you're looking for. Okay, so that would be the target. So 1650, 1550, 1750. So the next, this area still could be reached. We reached an important daily target, so it's taking profit there. It's bouncing a little bit. I mean, this is why I don't like these channels. You never know which one is correct, but if you connect more bottoms, then look at the accuracy with the 25 test, and then we go right back to it, to the midpoint. That was how I measured it originally, but there is an important area here. We got the 1R, we got this. So now if we close a bull bar, now we might be able to pull back, and we may not come down here at all. Because, I mean, this is kind of almost there. I might have not done a great job here measuring. So if that's the case, so that's that. That's last week's breakout. That just a tad little mismeasurement looks like a failure, but it is a failure. We have not tested, so we could still come down and test that thoroughly. Last hour was a strong bear. Bar closed on its low, so we have tested its low. We have met some really significant targets. So I do want a reversal, But bar 25 is not a good bar to buy above because you have two bear bars, 24 and 25, so probably sellers right away at the top of that bar waiting, so I don't buy anything like that. I just simply wait. It's not a good small pullback bear trend though, so it's just a channel, is bear channel of a bear flag, which will reverse right back up to here again. So hopefully we will soon, but if you do buy, that's your target right there. We're gonna try to get to that. But I don't like buying above bear bars and consecutive bear bars. So I have not bought anything. This is still nicely coming down. Okay. There's nothing to buy here, so there's nothing to buy. Just hold on, wait for some bullish pressure. Quicker profit taking this is just selling relentlessly. Okay, that's a good start, but would have been better if we were to test one tick underneath that 26. Suddenly, there's some buying here, but bulls need to close a strong bull bar. I don't know what they're going to do. It would have been better if we were to come down and test the 26 low, make a wick, and then go up and close a bull bar. I'd buy the close of that bar. But this one, it's a good open, so it's going to attract many buyers if it closes on its high. And many will start to buy, and they're already buying. But I'm not convinced yet. I'd like to wait for bar to close before I do anything. It's now a much better small pullback bear trend. Okay, it's not. I don't know if the bulls are coming. It's right now turned into a much better small pullback bear trend. Okay, it was a mess here. Now it started with 22. So anyone bought above 25 disappointed, bought again lower, and they see a 2-bar sideways, and they're trying to get back to 25 high, which they did. So that is break even for those bulls who bought one tick above 25. I didn't buy above it because that's 2 bars. I know I'm going to get in trouble, and I don't want to scale in to buy again and fix something. So I'd rather to wait for bulls to show up, then I'll consider buying. I have no rush. I've got someone at the door. Can you guys just hang on for a minute? Okay, so I'm still short here. Not interested in buying anything unless I see something bullish pressure, because it's turned into a small pullback bear trend. Keeps coming down, and then we start to see reversal back up, which goes about 66% of this day's range. It recovers pretty good. I don't know if we're going to be able to recover that much, but hey, if it starts to buy, all you have to do, trail your stop up, right? Inside bar 27 is bulls bought above 25 is not a good bar, bought lower and got a break even, but now they're getting an inside bar. Another inside bar would be nice, but we could still come down. It could be a triangle, it could be a final flag, but it's really good open with 27, terrible close with 27. So the bulls are trying to compensate. I'm just going to wait. I have no rush here. Look, they started to buy. So it just started. But I don't know. It has to close bullish enough to make me believe that we get an II here. Could be sellers above, not far away, towards the high of 26 waiting once again. So what I want is something like this. Okay, like pressure. I want to see this. I want to see this pressure, like something that I can take as a spike, pull back, and then like bull flag. Okay, that's what I'm looking for. Twice bears try and fail, right? So try to sell again, and then that's where you buy, or you buy above that pullback bar. Okay, so then you measure this range and you look for a 33% and a 50% and a 66%, whatever you take profit there is, but eventually expect, because of the strong sell, expect the resumption of the trend. What about a resumption of the trend even a lot earlier? So you got this double top low 2 from the highs and flag there and a flag there and a flag there, and finally it starts to rotate and you get a tight bull channel. It's kind of like a small pullback bull trend. It makes a wedge top and then comes down, takes out that low and then makes a new low, and it sells towards the close relentlessly. I mean, that could happen. Bulls trying to close a bull bar so they could get some kind of a 10-point move up, but I need to see that bull bar. 27 is not doing it for me. So it's upside down hammer and it's bullish. So bulls could be saying, okay, so we're hammering this right here. We're ending this trend and we're ready to make a 10-point up. Okay, then close a bull bar and make me believe. Then I'll buy I'll scalp around, quickly scalp around 52.25, and I'm going to hold some into 27.50 to 28.50, maybe even 30.50 or 52.30. But this bar has to close bullish. This bar has to close bullish. Otherwise, bears still selling. 3 stacked bull bars could be a sign of a good momentum. Buyers started to stack up above the prior bar's high, which is 28 high. I just put a buy order there. I took profit with bears. I didn't like these II. It could come down more. Obviously, stop order is a safe way to enter the market, because if it keeps coming down, I don't need to worry about anything. Because if we start to reverse, we could easily go and test the bar 18 highs. Bears trying to sell underneath the same bar. I'm trying to buy above it, which is bar 28. Because they see a triangle. They want to go and test the 25 low. I'm flat. I'm already done with this bear trend, but it's still trying to come down here, so you can still hold. So now there might be a trap here. Look, if this ends up becoming a trap, then I'll enter above 28, might even enter above 29. Slower SI is still in the sell zone, so any pullback is being sold steadily. But as long as bears fail to take out the bar 25 low, there's a 10-point move to upside when you measure from the low of 25. So that's what the bulls want, but they had a trouble above bar 25, and that's why I said don't buy above it. It's not doable. But we get that double bottom higher low here or wedge bottom higher low we're going to go up. And we might actually test 27, 25 to 28, 25, possibly even 30, 52.30. But that hasn't set up yet. So when it's ready to reverse, I will hop on. Still a bear trend, still selling. Anyone sold underneath 28 well, they didn't really get trapped yet. They're trying to make a point. If they fail to make a point, then they will be trapped. That you just have to count. So if you actually count, right, you need to be able to make a 1 point to continue to sell. So you entered 2025, it has to go to 19. It's at the 1925 now. That's 4 ticks. It needs to go 19, 5 ticks to give you a 1 point. If it fails, it just did. Okay, so bears are still making money here by selling underneath bars. So now wait to see if we can actually take out the 25 low. We take out the 25 low, then we're going to come down here. We're going to have a much better wedge structure than this area. I would look for some kind of a reversal. So we might still come down to the 1550. If we fail to take out the 25 low, then I'll take a look for another reversal. But these are pullback bars for bears to sell. Bears want to take out the 25. But we started to put in, I don't want to say there's any bull pressure here. There's none. It's still just small pullback bear trend. There's nothing here, not yet. So I'm going to expect this measured move and this area to be tested. Maybe we test right here, which is the channel extension, and then we reverse. So I have no rush to buy yet, and just waiting. Okay, so we reached almost there, 1750. Market could be wanting to come down to these moving averages. I said it's a good confluence in the morning. That's 200 SMA and 50 SMA together. But it's quite far away. It's 51.98.50 area is, say, 98. Right, so you have quite a bit of 20 points there. 20 points there. It's a very messy, small pullback bear trend, but it's still making its way down. Look for obvious reversal signs before you even have an attempt to buy anything. Market will sell every pullback possible. Market will sell every pullback possible. $15.50. I guess it's doable. $16.50, $15.50, $17.50. There is a micro double bottom on the 15-minute, but not necessarily. Well, it looks like we're going to take that out too. All right, here we go. Here we go. $15.50 it is. Let's go get it. Just from here. Buyers are trying to enter one tick above 30 because they see a wedge bottom and they want market to get back up to 23 close or 23 open, this area. So they might actually enter right there. What about the 15.50? Well, we got the measured move, 16.25. So they're already taking profit. It's kind of a bummer we didn't get that, but we could still get that. Not a good bar to buy above bar 30, so I would be careful there. Slow RSI is still in the dumpster, so nothing to buy here. What do I think about the hourly bar? Well, it reached our target, right? I have taken profit there. It could reach down here, so it could even reach down to here. So there's only less than 20 points there. We could easily reach that target, which is moving averages. But we reached my target here on the 15-minute, but we could continue to come down more. So bears want 2R of the Asia range breakout. But we reached a target, so I'd be careful here. This was a buy zone. You got a wedge here. I don't have any buy signals, so I'm not really interested in doing anything. This can come down more. The reversal is going to be a clear sign. Just don't bother picking these bottoms. It's going to hurt you. Because daily is very strong and it's trying to reach somewhere. There are magnets here, right? Black is the 200 SMA and the red is 50 SMA. Yeah, we reached the measured mood targets, and but there is more. I mean, there's a structure here. We could even go more. So I'm more interested in this extension breakout now. Channel breakout extension 25%. See if we can get there. All right, we got another target. Great job, bears. But now, can they accelerate and come down here and then reverse? Possible. There is. So you got a spike here. You got a pullback here, right? You got another pullback and the final leg. So we reached the target. We could finally reverse. What do we need? We need outside up bar. We need a good inside bar that's closing bullish on its high with almost no upper wick. Then everybody's going to start piling above it. But we also have a breakout bar 31 from under bar 30. There are sellers waiting there, and that is 52.18. So they might try to sell that another 3 points or double 3.6 points. Who knows? I'm not really excited about buying anything just yet, but I see the wedge there, and market could go up and test around 31.50 eventually. They just need to show me some good signs to buy. They just need to show me some good signs to buy. Yeah, okay, so nothing here. Yeah, okay, so nothing here. It's more than 20 bars gapping to the EMA. We might need to wait until bar 39.40 before we see the midday reversal. Asia wants the 2R, but I don't know if they're going to be able to get it. I'll take a few questions. I opened, some questions came in, so I'll take those before I go. Macro double bottom 31.32 inside bar it's not a buy signal, but like to see bears reach that channel. Not interested in buying unless I see a strong bull close. That's Monday and Tuesday, Edward, because officially the event hasn't started, I believe. It's starting tomorrow. What would you prioritize for homework? You mentioned for sequence, how do I optimize my study time? Well, the way that it worked for me was to watch the video course and then read the corresponding book chapters to deep dive into what Elle is teaching. Then take that and apply to playback charts and trade. That's what I would do. I would focus on inside bars at the highs and lows of a trend, looking for reversals. I would look for IOI, II, OII, OO, these bar sequences, and then I would also look for how does trend begin at the open. What is a good strong trend at the open? What is a weak trend at the open? How far does it go to reverse back? Study those. The trap traders, the most important part of actually being able to trade, you have to understand where market traps the traders and how those traders scale in to fix their bad trades. You understand that, you basically get half the trading, done. I think that's the most important thing. Market structure is the most important thing if you really want to conquer trading. Understand market structure, understand pattern within patterns within the market structure, what comes first and what comes after, okay, is what those pattern sequences are, right? So they're kind of important. Let me see, hold on. I'm gonna show you something. But hold on a minute. Cancel that. All right, here we go. So I'm gonna post this. This was my Bible, lack of a better word. Okay. So you guys can download and laminate it, tattoo to your brain, do whatever you do. But study this. First study the market structure, L. Brooks's market structure, understand, and then study. That's your strategy, and this is your tactics. Okay, these two charts are. If I can find the other one. Hold on, guys. I'm actually making the list for you. Okay, we're still pushing. We got the 200%. We're going to those daily moving averages, it seems. All right, we're just about to get the measured move. 2R Asia breakout is done. Wow. All right, is midday reversal will happen, so get ready. Okay, so the first question here, actually, I did answer some questions, but here is, I'll take a few more, is on the 15-minute chart, this morning you had several areas selected in different colors. Could you explain how you drive them? So I have a color, so I have colors that I use, for example, tight trading ranges, area of interest, or balance zones, they, as Al Brooks calls them, are the tight trading ranges where markets spend a lot of time there. It's basically a fair price, is generally in yellow. So market actually goes in there quite often and swings from there, right? So eventually when we actually reverse, we're going to break and get above it. And the next one, we're going to get a lot of resistance there. These are basically after we sell, pull back, but we kind of, maybe I did wrong there. No, I didn't, but we really couldn't test there. But that was yesterday. And this is actually drawn for today, okay? So we kind of didn't go there, but we tested there. And then we came back down, right? And that was with news at 8:30. So that's what I use. And if I have it in green or blue, that is a buy zone. So these are sell zones. This is area of interest, tight balance zone. So that's what it is really. This is Asia. This is Globex low. This is Globex high. This one is mid-Asia, which is important. And then I have midnight open for US, which is this bar. It's a key area. If we close below it, we are bearish. I then target the Globex low. If we break the Globex low, I look for a measured move target, right? Oops. There we go. Market can even push towards there, but we need to pull back a little bit. We're gapped down so much. could go sideways and come down more. It is possible that we can get there. It's not so far away. Yeah, so you can see that this area is basically a trading range, right? So false breakout in the London session or early end of session or mid-London, and then we just go up, and then right there is resistance or trading range. We trap and we come down. So basically we are oscillating. We have a trading range and we're oscillating, okay, around it. So we're going to get back to that trading range eventually. So market will snap back to it. Okay. All right. So we met the measured move target for this big bar reversal. Okay, so I don't really need this anymore. I'm going to get rid of this. You guys got the idea. Because I think we do have a good buy signal bar here, but it's a doji with a small body. So we might come down and test its 50%. If we don't break below that 50%, then we're going to start reversing finally. Where can we go? Is the upper third of bar 33. There's a breakout level here. There are sellers waiting there, most likely. If we start to get strong bull bars, stacking, we do a sharp reversal. It could be, but this right here is very strong, and it's a small pullback bear trend. It could be looking for reversal back to the EMA and then and sell once again from the EMA. If we get above the EMA with strong consecutive bull bars, then yes, we are going to go 50% up, okay? We could do that, or 33% up, 50% up of today's range. So, but it's small pullback bull trend. You know, I did show an encyclopedia pattern that, you know, no, I missed, no. Let me see where that is. So we could get something like this. We could get a trend like this, but that is about 33% up and then sideways, and then it goes 50% up and then comes down. Because it's a strong trend today, that's going to dictate how the rest of the day can be. Sharp reversals require large bars. Stacking is by the close bars, and it's like in a steep angle. That hasn't started yet. They're probably buy stop orders above bar 35. And the bulls want to take price probably up to 12.25 to 13.75 or even 52.15 area. 5 or even 52.15 area. So their buy orders one tick above that pin bar at 11.50. Too bad we didn't get a bull close with that 36. I did buy there, one tick above, scalping a little bit and leaving a runner. See if I can get it to 52.13.75 to 15 area. But I'm buying the first bull, you know, reversal here, and it may not last. So I'm looking for 14.50.15 area test. I don't know if I'm going to get it, so I scalp just in case if market wants to continue to come down more. So if that happens, I will exit out of the runner. So we could go test is 1350, 1375. So we could go test is 1350, 1375. Maybe a little higher, but you can see that it's just not a quick reversal. But the bulls who bought at one tick above bar 35 made 1.5 tick solid trade there. So that's good news. That's a good sign that we could get more bulls here. If this bar 37 does not close on its low, bulls will try to take out the bar 34 high. But if it closes bearish, then we could come down and try to make a double bottom with 35, or take out that 35 low and continue to come down. So I'm expecting bulls to close a bull bar and try to get to the 1350, 1375 and higher. So I'm holding this a little bit more. All right, so the 37 closed above its midpoint, but we just need a follow through here. So I'm still expecting 1350, 1375 test, could go higher towards 52.15 and then get a rejection there. And that's the breakout point around bar 33 and 32 low. So leg one, that's low one, 36. We're going to get a low two sell, but it's not ready to do so. So I'm holding my long a little bit more. We could get a 10.9 to 10 points. So 1450 is 9 point. 1550 is 10 point. Don't think we're going to reach to 1550. I think we're going to be challenged around 1375 to 1450 if we don't come down now. But want to hold this a little bit more. It's difficult to buy. It's a small pullback bear trend. They could sell this pullback, but I'm looking for a couple of legs up to the EMA and then get some kind of a double top and then sell again. If we start to build bull bars above the EMA, then we're going to get a small pullback bull trend, reversal about 33 to 50% pullback of the day's range. That's what I'm going to be looking for. But I'm in a scalping mode right now. I'm not risking anything. This is a strong trend. Market's always in some kind of inertia. If this was too low, it reached a measured move target perfectly. So now we'll start to take profit. But we need 2 consecutive bull bars to see some bullish pressure. So we don't have that. See, they're trying to get the low too, but that's because somebody sold above 35, trying to get back, okay, down here and break even. Bar has to close bearish for me to think that it's low too. It did breach 37 low, but it's leg one, leg two. It's better to sell a little bit higher than here. So I'm going to wait. There's a much better place to sell, which is this breakout 32, 33. So I'm still holding this. We get this another bull bar here. We don't have to stop at 1350. We could certainly get to 15. 52.15. So I hope I can cash in here more. If you want to, one question is, we're always being told to pick just one setup until being profitable. Could you suggest one that you think the easiest to spot on execute? It's actually 2 setups, but all in one package. I would recommend you to learn to count 3 legs, wedge structures. And within that structures, if you want to buy and sell, look for second entries, right? Always remember the second leg is a breakout leg, and you will get a nice measured move with that downside with the third leg. Sometimes the third leg can be short or longer, but you eventually get the reversal. Then you look for second entry long. Okay, so hold on. I'm about to scalp the 1350. Oh, Suki. This is great. All right, let's see if we can now get this 52.15. All right, so that's what I would look for. So basically what you need is, I would not trade the first 6 bars of the day. If you're new, stay out of the open, look for 10 o'clock, okay? So if market is coming down, around 10 o'clock, it goes like this, and it's looking for a breakout. You get a breakout, always expect a pullback there, and then you can sell for a swing. If it's like this, look for something like that, right? It could go up, it could come back down, it could go like this, or it could do this, like that, right? It comes down, does a fake breakout, goes up, and then starts to sell again. You look for a double top setup. So it's 10 o'clock to 11, you get these traps, which I talked about yesterday, is like here, for example. So there's a, right, bar 6, 7 is 10 o'clock, right? So look what happened, right? So there's a tight trading range there. We went up, trapped, we came down, went back. See, it was like this. Trapped, came back down, went back, swing. But that swing didn't last. What did we get there? Wedge bottom, right? You buy above this, it could actually reverse back down. Sometimes wedges don't succeed, they don't reverse, and then instead it continues down, which gives you a possible measured move target or measured move target. So second entries are better. That's your second entry, and yeah, so you got a nice here, leg 1, pull back, leg 2, pull back, leg 3. So you measured this leg 2, you basically got an identical leg up. And then I start to look for pattern, right? If this was strong, I look for a bull flag, right? So that's what I'm looking for. Now with the wedge structures, right? This is basically what you're looking for. High 1, high 2. You want to buy this and then buy that. You want to scalp there. You want to look for counter trend and then look for another leg up to here. But that you're done, because now you have 1, 2, and 3 push wedge top. So now you want to look for first sell. You're not going to sell that. You're going to look for a second sell. You're going to sell, and this is your target, so and so. Sometimes you get a very weak second sell. Everybody thinks that's a second sell. Identify those weak sell signal bars, because sometimes it just goes up and then gives you a reversal back down. Okay, identify those good sell signal bars versus bad sell signal bars. So that's a really good setup. It can give you 5 to 10 points minimum run. Okay, we're going back to the channel. I'm gonna get rid of this channel. I don't really care for it, but okay. So we came down, measured move is done. So we now reversing. We have breached 15, and I said 16. What was that? 16. 1550 was 10 points. We went to 11 points, but it's really nice. So who's gonna tell me which one is my second entry long here? If you were to buy with this bar, which one would you buy with? Where would you put your buy stop order? Which bar? Okay, now sensors are coming. No, 38 is wrong, 37 is correct. I would put my buy stop order, it's above 37. Why? This is already goes low and closes high. So technically 35 is your first buy. So if you buy above it, probably sellers waiting to sell that for the first time. You do not want to buy one tick above. It can even come all the way down here. It could trap you in and then bring you down here, right? So you want bears to try one more time. They tried it, it failed. You can now you can even put your buy order above bar 36 to get filled. So is second time bulls entered long trade is actually above 36, but I would use 37 because I'm looking for a buy signal bar. So I would put it would be a late entry, but it would be a good entry. So market comes down, bears tried last time and failed. You can even buy one more contract above that, and you're compounding into here. Or the last breakout point, which is there. So you want to hold it in there. What do you mean, noob? Can you apply that same diagram to the chart today? Oh, yeah. I see what you mean. Okay. So 10 o'clock, it's right here. You have a small trading range, right? Market is coming from above. You have a 3-bar trading range, right? And then that right there, it just went up, right? So everybody trying to buy this bar might have trapped with this bar, and then it came down, and it gave you a great sell signal. So you just sell. Sell. As long as we don't take out those bull bars highs, we're good. We're going to keep selling. It's not all that visible because it turned into a trend way too early. But that's the 10 o'clock I look for, around small trading range. If you go to a smaller time frame, here, I'll mark that. So I'll take the whole area. Okay, so starting around here, there's a trading range there, right? You can exclude the wicks and just keep even 7 right there. So that's your trading range right there. That's 10 o'clock. Although, wait, let me see. That's 10 is here, right? If it's not clear that you cannot find a trap, then draw your 50% and see what the market is doing above and below that 50% of that range that you identify. You'll only have a 1 bull bar, no consecutive bull closes. But then you have this. Now we're taking out that trading range low, sell underneath that, and then you get follow through. Oh, great bar, sell that one. Because you're still very close to the moving average. So you're going to keep selling this. But today is not a good example because you already started with trend, first reversal, rejected, and you get a trend that way. But it's still there. So you can even, let's see, here's a 10 o'clock, right? 10. Oh, it's so obvious. Trap, right, I still don't have a bear close, but that one, this one that after the trap, I'll sell that. But the problem here is that it's going nice. You actually made money here. But now you have a really good bull close. What do? Right? If it goes back up, it's probably sellers there again, right? It's trying to get closer. So you can sell there and break even. If it gives you a break even and then some, hold your short. Continue to hold it. And then you look for a wedge bottom. Remember, when is the first swing? Sometime around 11:30, you get the swing, first swing up. Okay? And we got a nice swing. This is a 2-minute chart, but you got the idea. Right? So that was the first swing. And then sometime, when is the next swing? What time is the next swing we look for? Going once, going twice. What time is the next swing sets up and we look for? funk method. Yes, 130. And look, 130, we go 130 and it goes sideways, trap, and swings down. Okay, so it's midday. We have a low 1, 36, and they try to sell again with 37, failed, low 2, so therefore high 2, and high 2 above 37 is, I'd say, or you can find 38, doesn't matter, but I'd say 37 is, we get a leg 1, leg 2, pull back, might get the leg 3 here, but it's still always in short, it's not always in long. Now, you have a defined days range here with 35 bars. So now, what am I looking for? I'm looking for a pullback, right? So where is my, that right there. Okay. So I'm looking for a pullback, a shallow pullback with inertia for bears is here. So we reach there and not able to close above it, then the inertia kicks in, we continue to sell. I call that a shallow pullback, not being able to breach by bulls. That means we're never going to go up here, and then we're going to continue to sell. Okay, so that's what I look for. But if we close bull bars above that, then I'm definitely expecting 33% to be reached by bulls. And then I'm going to look to see if I can sell from there. Sometimes we go close one bar and then fail, come back down, close another one. That creates a double top around here. Then I can sell. So shallow pullbacks are, to me, is a sign of strong trends that they want to continue, keep selling. So that's what I'm looking for. How do you add 1 hour EMA to your 5-minute chart? Use 200 EMA, or I think Brad uses 223 SMA. I'm not sure, maybe EMA. They just plot in the same area, or there is a indicator you can use. Hold on. If you're using NT8, you can, give me a second. You can use this indicator that will plot similar to what Al Brooks's chart is, which is jaggedy, but it's basically, it's this. Okay. I think the market is trying to, so the market cycle we are bearish, is we had small pullback bear trend. We're going sideways now, okay? So we're gonna form a trading range. Trading range highs could be around there or could be around here. So we could go up there and then continue to sell from there once again. Now, when do I expect this to reset and have a reversal into bar 18? When I start to see 2 consecutive bull bars closing above EMA, and the bulls are buying every pullback to the EMA. Then we get a small pullback bull trend, which I showed a chart earlier that could get us to here, come back down, and then here, and then we can come back down to the lows, or somewhere there and close the day around there. So something like this. Somewhere there and close the day around there. So something like this. Bit of a small pullback bull trend already started, but it needs to get above the EMA What about bears? Can they actually sell after 3 wedge top and a double top? Well, let's take a look. We might go up in this trading range. Look at the strong sell. 1, 2, 3, 4, 5, 6 consecutive bear bars after a small trading range, right? So right there. This is a sell zone. As early as sell orders here. So we're going to hit that 25 low. We're probably going to go into this area. I'm going to look for a 2 test and a good second sell low 2. And I'm going to try to sell from there. Could be like that. Now, here's what we can do. If market goes there and sells briefly, but not much, and then these breakout points hold, and we break it, okay? Here's what we're going to go. You see this structural break right here? Sorry about that. Here, right? We could go in here and then sell, okay? So either that, sell orders starting from this price point and higher, okay? Yeah. Okay, I am done with my session, but I've been trying to add extra hours today and yesterday. I could hang around a little bit more. I'm just waiting for my lunch to arrive. It hasn't arrived, so I'll just wait a little bit more. But when the lunch arrives, I am out. Waiting for 52.18 and then higher. There's already 3 legs. Leg 1, pull back. Leg 2, pull back. Leg 3. So leg 3 is similar to the size of a leg 2. Okay. So it's the breakout leg, so it could reach there. And that it happens to be the bottom of that sell zone. So who bought and held? That was a really good second entry long, especially 38. It's kind of telling you, buy me now and listen to Rose. Who's better than Rose? I'm just kidding. But you know, we're there right now. And I'm so happy I just made money, so this is great. I'm just scalping here right now. Excellent. Okay, I'm assuming some of you at least cashed in here. Sellers are here. This is the 3rd leg up, so but we could accelerate suddenly. Watch out, 33%. We could get there. We could buzz through this. We buzz through this. We're still going to come back to this. We could use that as support and get to the 33%. Then I'm going to look for this area to be tested. This is always in long, but there's a structure here. This is trading range highs now. Don't be so excited about this, okay? Market could reverse. This is, what time is it now? 2 minutes after 1 o'clock. It could still go up a little bit, but around 1:30, we could start to swing back down again. So I would be extra careful here. Take whatever you can, just bank it, and then you can cry later for what you missed or left on the table. It's Friday. Fridays make wild moves. You got a nice 3rd leg going up, but it is the biggest bar in this reversal, so makes me wonder where it's trying to go. right? So in the middle of this here, they're going to try to sell once, they're going to try to sell twice. If we breach this, then the second sell will be invalidated, and then we can go up more. So it's trying to close a bull bar to continue into the 33%. So you should be paying yourself here. You can hold a runner, but you do have to pay yourself here. Bars like that, 43 could be a gift. So watch out. You're about to test this area. Sellers were strong here. They could be trying to trap you. All right, so hopefully you guys learned something today. Globex session, Asia, I don't know. We could still come down to here. We could still sell, okay? So measured move target is 88.75 for bears, but I need to see sellers. We met the 2R, so that was my target anyway. And then right after that, I started to look for bull signal bars like 35 on a smaller time frame, and I started to enter. I started to buy, and I made money. I actually made a lot more than this right here because I missed this move. I was too busy answering questions, and I didn't trust my broker and what they were doing with the executions. My executions were delayed, so that kind of spooked me. So I said, you know what, I'm just going to wait because it's news hour. Things gets hectic. But I did sell here. I made money, and then go in reversal. I waited for this reversal. I actually doubled the amount I made here, going up. Bulls closed 43, still very nice, but we still don't have officially second bull bar closing above EMA. That could just trap the traders suddenly here. So you should be in a runner. And if you haven't taken any profit here, I mean, I don't know what to say. If this bar closes bullish, oh yeah, they're going to buy the first pullback to EMA and get to the 33% for sure. But it could reverse suddenly, and they could trap you. Where's my lunch? Is the guy who's delivering it eating it somewhere? Why is it taking so long? The third leg is extending. Okay, now they're getting serious here. We didn't make a double top. And there's only 50 seconds left, and I don't know how bearish they can close this. If they can't, we're gonna go to the 33%. So maybe I was wrong here, and bar 23 is the okay. So that's it done. We all reached and breached. No one sold. So then this is your resistance, because that's still three 5-minute bear bars. That's good enough to create a supply zone or a strong sell zone, and then gets another leg and 2. So that's 3 legs down. It's a good place, but it came in up here. I think it's going to want to tag the 33 now. I do expect a pullback to EMA, which we will, but many will buy above that bar. So, and then they will also buy the pullback. Okay, so the buy order is already activated. So we are on our way to 33% pullback. 26.75. Wow. So I'm very excited about it. But this is still a sell zone, okay? Because look, you only have 2 bear bars here and only 1 and 1, okay? So is nothing here, okay? Even I'm not so sure about this. I think we might even, I don't know about this. I think this is, if we get a really good reversal here, is we could actually reach this area, but let's not worry about that right now. I want 33% hit now. Okay, but it's still a good sell zone. There are a lot of stops here, right? And we might breach a little bit and then come down. This is still a good sell zone. All right, market is about to make a 19 to 20 point move up. I would be careful here. Profit taking will begin as early as 19, could reach 20. Max is 21, so it's right around there. Okay. Sellers are here and slightly above. Now, when do we expect market to go even higher? Here's a clue for you. When market reaches the 21 point, which is right around there. So we're going to take profit here. That's inevitable. Okay, we're going to take profit here, try to sell. But if the buyers show up here and you get a really nice buy signal bar, and we get above the 21 point and couple of quarters, maybe 21.50, 21.75, okay, we start to get more bull bars. Expect 50%, maybe even 66% test. I think the 50% is doable if we start to buy the pullback at the EMA. Solid 20 point. We could breach above it a little bit. This is small pullback bull trend. Look at the ATR is 325, 3 points and a quarter. It's a steady buying. It's a little bit inclined, but it's still good. And it could still go up even if it pulls back. There's nothing here. This is always in long now. Oh, that's okay, Cure. We're just having fun with you. You don't have to explain yourself. We kind of knew you were joking. Yeah, just finish the course. That's the right thing to do. So you are doing the right thing. You can always purchase the last, the previously recorded webinars. They're at a discounted rate. But I would recommend you, instead of buying my sessions or anybody else's sessions, buy Al Brooks' sessions. Start with that. And then when you're done with the course, you can join the trade room. There's no rush for that. We're here. Oh, well, you can't really hear me, can you? Since you're not in the trade room. I'm talking to someone who cannot hear me. It's beautiful. 33%. Almost there. 20 points. We're going to pull back to the EMA. But this is wonderful. Wow. Really excited about this. There's a breakout test, which is Globex low is magnet. There could be sellers there. Okay, 33%. It's in the bag. It's also 21 point. Okay. They're now going to start taking profit here. Well, it's accelerating, but it needs to take profit at least like a couple of points. 20 point is a really good swing. This is a really good reversal. It needs to take some profits, maybe I'm guessing like maybe 5 points max, and then continue going up again. So I would expect a pullback. That's 7. 5 is right there. And by the time it gets down, I mean, we might actually keep the gap open to the moving average and then continue to go up. But I would expect some kind of a pullback, except that this is beautiful. All these bars are identical sizes. So if nothing here and we're breaching the sell zone, and this says that they can buy the first week pullback, and originally I actually measured this bar, but still I expect a pullback. But bulls showing signs that they want to continue buying because they have breached the 21 point pretty strong here, but I expect a pullback here to somewhere in the middle of the current price and the EMA, maybe top of bar 44, 43, and then and look for buyers again. Small pullback bull trend is the pullbacks could be only 2-3 points and not even 5 points. So this could just continue to go up. So if anyone stayed, I ended up entering again is above bar is 44 and took profit at the 33%. There's profit taking with the 46 upper wick. Buyers could be down at 25.50 or a little lower. There's no sell signal bar here, but the upper wick. So I just want to see a bit of a pullback before we go up more. Otherwise, just you can hold on to your long. ATR is 3. I don't know. We could get that 3-point pullback. Bulls started the gap above the EMA. They're stacking gap bars, so it's a good sign for them is to say that they could buy the first pullback. But remember, 130, we could get another swing down because look at this open. Although the first 3 bars kind of creates a little bit of confusion there, but after gapping like that, market will try. It could actually start if it makes more than 6 points move down, and you start to see bear bars closing, we could come down and test the lows. So be careful with that, and that could start around 130. They're still trying to push towards high because they see a better sell zone there. But that 33% is still holding. We don't have a bull close above it to say that we're going to keep going up to the 50% pullback. Market could continue to get 40 point down. That was 40 plus, I think, 20 more. Now bulls are trying to get a 40 point. So we could even get up to the 66%. Wow. Okay. So this is now supports. We broke, came back down. I would like to see a pullback to EMA still, but nothing here that says that you should exit out of your long, say something like that. We're at the 50%. We could go test and then come down, but they're using this as support now. So good for the bulls. It could actually reach the 50% pullback zone. But I want to see how they're going to, okay, they close a really nice bar here. So it's a small pullback bull trend, very steady. Now look at the ATR. This is what I'm talking about. ATR is very strong. I mean, not very strong. It's low, but the buying is strong. So bears are buying all of these contracts, and now more bulls are entering. So we got a steady buy. But there will be a pullback to the EMA eventually. Beautiful price action by market makers today. It's Friday. I did say we could get wild swings. That's what we get. Could even reach 52.38.39 area, which is slightly above 50%. I think you should look at the J 2018, 19, 20. After the 2020, he started to reduce his time during the week. Okay, everybody, my lunch is here, so I have to go now. At this point, I would target the low of yesterday and 50%, but if we keep going, definitely this area is 46.75. Okay, bar 7 low is, or breakout points, which is right here, 50%. But market could recover 66%. Is I want to buy the pullback to EMA, but I'm also worried about the bears getting another swing down. Okay, this is beautiful, but how many bars? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We might get 2 more bars, and then average 12 to 16 bars, and then we could reverse back. Minimum 6 bars, and then 12 to 16 bars, or 24 bars down. Watch out for those bears trying to reverse the market here. But so far so good. But this is resistance here. Okay, is you're in a balance zone. Markets spent some time here. Breakout test area, Globex low is also testing. I don't know if we're going to be able to get to the VWAP, which is the moving average. We might. If we start to break above VWAP, we're going to reach right here. That's where I'm going to look for sellers, the key zone on the 15-minute chart. Have a good weekend. Those of you are in Orlando, you have a wonderful seminar with the team down there. Please say hi to everybody from me. I will be thinking about you. Please post your photos, and please say hi to Richard for me. You guys have a wonderful time, and I'll see you guys on Monday. Bye, everyone.